The home buying off-season continues in Los Angeles with numbers that are generally more favorable to buyers, thank God. And vacant units reach another low. Let's dig into the numbers. I'm Jon Schwartz, a house hacker, investor, and realtor in Los Angeles, California, and you're watching House Hack Los Angeles, a channel about winning the Los Angeles real estate market. This is my bi-weekly market update for September 28th, 2021. Each Sunday, I review the week's MLS activity for Los Angeles County to bring you the latest in what's happening in our market. These numbers come straight from the MLS, and you won't find these graphs anywhere else because I make them. If this is your first time watching the update, here's a quick explainer. Each graph covers the previous 12 weeks. The bars represent actual weekly numbers, and the line represents the 4-week trailing average. This smooths out the noise and helps us identify trends. Now, let's get into this week's data. Looking at single-family listing activity, the net new listings 4-week average is almost 100 units lower than it was 3 months ago. This is what we see in the off-season, less inventory, but because there are fewer buyers in the winter, pricing and other indicators tend to improve. And that's more or less what we're seeing. The price for a home in Los Angeles continues to drop. Never thought I'd say those words again. The recent peak in 4-week trailing average of price per square foot was about 2 months ago at $771 per square foot. Today, we're at $742. Improvement. Median days on market is still higher than it was 3 months ago, though sale price to list price ratio is a touch lower. So not everything's rosy, but I can tell you anecdotally too that things are a little better for buyers out there. In condo listing activity, we see that condo inventory hasn't fallen off as much as single family homes, and when we hop over to sales indicators, we see that condo pricing is a little higher than where it was 3 months ago. The condo story since the start of the pandemic has been an interesting one, as it took condos longer to rebound, and I'm not surprised that pricing is still catching up to where it should be. On a positive note for buyers, median days on market is significantly higher than where it was 3 months ago, and sale price to list price ratio is flat. In residential multifamily listing activity, and remember we're talking about 2 to 4 unit buildings here, new listings sees another week of declines, though you'll notice that overall volume has grown, i.e. more property listed and more property sold, despite the net dropping. I've seen more multis coming to market in the last few weeks, perhaps because of owners wanting to sell before President Biden makes any changes to the 1031 rules. Stay tuned for a future video on that topic. In multifamily sales indicators, we see more static because the sample size is a lot smaller. Currently, 2 to 3 dozen multifamilies sell in LA County each week, whereas single-family sales is between 300 and 400 units a week. So the lines are bumpy, but basically everything's flat, which is what we expect in residential multifamily. It's not a cyclical market like single family. And lastly, looking at LA County vacancies as reported on apartments.com, we again have a decline in the number of vacant units. Quick story time. In my late 20s, I dated a girl who was into clubbing, and I would go with her despite kind of hating it. But I did love when the DJ played one of those songs with a huge never-ending build-up before the beat finally hit. You know what I'm talking about, where it just builds and builds and builds, and then finally... So that's how I feel about this falling number of vacant units in Los Angeles. At some point, we'll hit the bottom, and this number will flatline. But until then, my excitement is just building. If you're curious about a smarter path to homeownership in Los Angeles, check out this video about house hacking, or this video about what to look for in a great house hack deal. See you next week.